All right, everyone. We're going to look at a stock I've wanted to look at for a little bit, and it's Neo. I used to follow this stock pretty closely a few years ago, and I have lost track of it in terms of where it's been for the past few years. So we'll do three things. We'll look at the latest earnings. We'll look at the current valuation. Then we'll look at a few other potential catalysts or short interest or kind of other elements kind of to look at. So starting with the out, and I will say too with this one, this is a electric car company producer, and I'm pretty sure it's based in China. We'll double check that. Uh, yeah, Shanghai, China. So, okay. So this is the latest income statement from, September 2025. Really? Is that the latest I could get? Yeah, this was released on March 10th, and this is their latest earnings. So a little behind on releasing the statements, but that's okay. And they also have it inverted where the most current year is on the right side. So we can see here that the vehicle sales and other sales both increased by a small amount, by about, total sales increased by about 2 billion, since this is all amounts are in the thousands. And then you can see right here that the cost really cuts down their gross margin is like, gosh, 10-15%. So pretty thin margins. And right off the bat, we see the research and development along with the G&A and selling ate up every bit of profit that they made. And giving the operating, which is interesting, the operating income actually, they have this is weird, other operating income, which they're not putting in with their main product sales. This is small enough that I'm not going to bother to look up to see what that is, but it went down. So whatever it was went down, which, not great, but you can see that the operating expenses did go down by about 2 billion. So that's a net positive. They're at least heading in the right direction. Interest expenses. So right off the bat, we know they have a lot of debt. That's eating into their money as well. And you're looking at a pretty big loss from a pretty big net loss, 3 billion net loss. That is improving, to be fair. Improved quite a bit, 3.5 billion about. So headed in the right direction. And then a lot of other below the line items that I'm not too interested in looking at. So it's heading in the right direction, but you're still looking at a company that has big costs and, has yet to be profitable, at least as of now. So now what matters is their balance sheet. Their balance sheet matters more than maybe companies that are creating income, because then we can look at their cash runway. So their balance sheet is still strong. Though it's weird that they have current assets and cash assets listed separately. But look at this. They have a cash runway of, let me find their net loss here again. They're losing about 3 billion every quarter. So they have a cash runway of like a year and a half ish. Because they also got their short-term investments right here. Oh, no, that's restricted cash. No, look at this. Their short-term investments, they got 19 billion in short-term investments. So let's rephrase that. They have a cash runway of like 3 or 4 years. So very healthy balance sheet. We're going to look at their debt to make sure to see what their net position is. But that's a very strong balance sheet. Um, okay. Short-term borrowings. Well, okay, look at this, guys. Trade and notes payable. 53 billion. That doesn't even seem like a real number. Holy cow. So you know what? Scratch that. They do not have a strong balance sheet. They have a lot of debt. That's a lot of debt. Current portion of long-term borrowings. This is what they got to pay. Some operating lease liabilities, but yeah, they got a lot. Trade and notes payable. That's a lot. So that's a lot of debt. Ugh, gosh, guys. And we'll just use ChatGPT to confirm that. What is the net cash position of Neo stock? Um, they're saying, yeah, I don't know where it's getting that from. Yeah, let me screenshot this and be like, what does this mean, ChatGPT? Because either I'm getting something wrong or it's getting something wrong. Nope. I want, here is a screenshot of Neo's latest earnings. It looks like they have a lot more debt than cash. What do you got for me now? Cash limit, restricted cash. Oh, it's including the restricted cash in this. Um, yeah. So what I'm missing here is that it's including this restricted cash in this scenario. Which maybe I should ask. Yes, that's another 20 billion. Um, what is the restricted? Because I usually don't include that, but I guess they're doing it with cash. Can they actually use that to pay off debt if needed? Collateral for bank loans and credit facilities. Um, okay. So fair enough. Fair enough. I was excluding the restricted cash here. But if you include that, they have a net positive position, but it's only 6 billion, meaning that if they burn, another 3 billion, next couple quarters, like they have, you're looking at a company that's out of money. So something to watch out for, but interesting find there. So that's their latest earnings. If we look at their valuation, um, you're looking at a market cap of 15 billion, and 2.5 billion shares outstanding. So that's a very high market cap, for a company that has not made money yet. But to be fair, they do have a massive amount of sales. But they have a lot of shares outstanding, most likely from prior dilution. And so even when they do become profitable, they have so many shares outstanding that the earnings per share is going to be split out amongst 2.5 billion shares. So, something to watch for that. Look at this. In this little scenario, it's giving it 0 out of 6 health. But hey, at least it's still growing its revenue. It's headed in the right direction, at least. So that's something that's positive. Um, but I don't know. Let's see if we can get another picture here. Let's see. Yeah, here's the revenue. So if you buy this stock, you're buying the growth story. Because look at this. This is impressive. Um, the cost of goods sold increased right along with it. Um, but the gross profit is slowly improving. So look at that. The big story though is going to be their operating expenses. Can they keep these under control? Because look at this, 2022, 20 billion in operating expenses. You know, that's going to be the other story is can they control this? So interesting. I want to check one more thing. They should have a statement of cash flows in here. That I kind of want to see. Maybe they don't have it. Yeah, it doesn't look like they have it, which is fine. I wanted to see what how many shares they've issued. How many shares has Neo stock issued in the past couple years? So the statement of cash flows under the financing activities will usually show that. So I wanted to see it, but we can just look it up here too. Okay, look, so that's a high increase in shares outstanding, which is tricky because then even if the company's growing, it's growing, but so are the shares outstanding, which as a shareholder, it's kind of like, well, cool, you're growing, but so is the amount of shares that are existing. So I'm getting diluted and the potential future earnings have to get split out against more shares. So it's kind of like, so this is tough. This is a big increase in count. So yeah, 40% increase in share count over the past 2 years. So that's tough. Done a few equity raises. So that's that. But I want to see. I always I have a soft part in my heart for bulls. I want to find a good bull argument. So what are some big bullish catalysts for Neo stock? Okay, what do we got? Turning profitable. So they're working on that. They're going in that direction. Strong delivery growth. So new acceleration phase. So yeah, if they keep growing their revenue, and they can keep their operating costs flat, they're going to make money. Okay, battery swap network moat. 100 million cumulative swaps complete. What does this do? Does this, switching costs for customers, recurring revenue, okay. And an infrastructure moat versus Tesla. Margin expansion, gross margin improving towards high teens, which we saw that. We saw that here. This gross profit, look at this. It is getting better. Okay, international expansion. They're doing some tech stack research. Okay, so no longer about survival. Maybe it's turnaround now. Okay. So, yep, and we know the bearish risks. I kind of talked about them. The things that concern me are cash runways out, even when you include the restricted cash. Not that I should rephrase. It's not that the cash runway is out. The net cash position is almost negative. So, and there's a big difference there because we looked, their restricted cash was like 20 billion, then they had a lot of short-term investments in a high cash position. So their cash runway is still 2 or 3 years. But that just means it's 2 or 3 years before they have to either dilute shareholders again or get more debt. the debt that they have right now is still there, even if they spend it. So that's adding to that interest expense that we saw, where the interest expense is still there, still taking away from their profits. So that's tough. And then the shares outstanding is really tough because a lot of people, will look at like past performance of stocks and they'll be like, oh, well, it used to be 20, 30, $40 and now it's $5. It can get back to $40. But if the stock's been diluted a lot, which this one has, it's been diluted 40% in the past 2 years, it's a lot more difficult for it to, get those prior prices that it used to have because there's more shares. It takes more volume to move the stock. So, I think this one's interesting. I've known NEO for kind of a while, heard of it for a while. Things to consider again are they are improving. Gross margin's getting better. Their operating expenses are kind of staying flat. The revenue growth is happening. It's big. Those are some things, real things to consider. And then other things is that the outstanding share count's increasing. They do have a lot of debt. They are still not profitable. And so there's kind of these things to kind of think about as you're looking at the stock. This is kind of like my first in-depth look at NEO. So if there's anything that I'm missing, let me know. I want to learn about it. I want to hear. I love hearing the stuff about these stocks and things that I missed or didn't think about. So let me know and I'll see you in the next one.